Hey traders, I hope you all are doing well. So I just want to give you a really quick update on all the commodities here. I'm going to start with natural gas, going to go through gold, silver, palladium, copper, and crude oil. So let's quickly start with our favorite commodity, natural gas first. Okay, right here, what do we have? If you have seen my yesterday's video, then you know that we have our buffer zone. And if you have been following me from last couple of months, you know I look for a good reason to enter within my buffer zone. And as you can see, market pushed down, came back up with a pin bar. Now with that, we also have pattern forming, which is, if you have noticed right here, a head and shoulder pattern. In a real market, it's really difficult to see a perfect head and shoulder pattern, but as long as all the rules are met, which you're going to learn in my upcoming course, then you are good to go to take your entries. And now we need to mark the termination zone. Okay, this is my termination zone. Now we already have one bullish signal. Now if you want to enter in a less aggressive way, if this next candle will close above and becomes an engulfing candle, then this will be a sign that market will push up from here. Now, I normally take my targets as 1 to 2 ATR. In this case, if I am a position running, I keep my stop loss below this termination zone and my take profit wherever you want to take it. So at this point, we also have this 161 retracement. We also have this zone here from where we can look to exit our trade. Looking at the technicals, I'm expecting a market to push up. Looking at the chart pattern, looking at the market is in the buffer zone, closed in the buffer zone with this 25% candle. Let's see if it's a 382 candle or not. Well, that is a 382 candle, so that's an extra confluence. So looking at all the confluence, it looks bullish to me. I will not take any sell trades until we are completely broken below this support zone. Right here on currency.com, we have a similar condition, guys. Nothing changed. We have a same pattern. Just look at the on analysis. It's exactly the same. Now here we do not have a pin bar, but we are getting a pin bar right here. So this is also a pin bar, 25% candle. We do have a head and shoulder pattern. We do have a termination zone right here. If we get a red and green candle, that's also a sign that the market is likely to push up from here. So it still looks bullish to me. I will only look for sell trades once we are completely broken below this zone. Okay, let's check gold. Now, as you can see, if you are in my priority group, you know what do we have here? We have a nice entry pattern. This is our pullback entry pattern, and this is a valid condition. Looking at this pattern, market has pushed up from here, and the targets would have been hit. Now, what to expect? As you can see, the market has broken above the level of resistance that will now act as a level of support. Now, at this point, plot my Fibonacci tool. I look for a pullback, and the 50% pullback is 1781, from where we can enter and enter aggressively. If you want to enter aggressively, then this is your target, 1805. So now it is in the bullish zone and above the resistance. Now it will likely to act as a support that will push up the market from here. It can push up straight away as well, but it's always good to enter with a pullback to get a better risk to reward ratio, and stop loss can be always below this Fibonacci tool. Now if the market keeps on pushing up, the next minor resistance, it is 1823, goes up to 1829. This is the minor resistance from where you can expect a pullback. So have these zones on your charts. Let's check crude oil. We were in a buying area yesterday. As you can see, we did not get any reason to enter. That's why I always look for a signal to enter my trades, like in engulfers, pin bars, or a 382 candle. We did not get any of them. Instead, market keeps on pushing down at this point. Now we can use this zone as a trend continuation zone, and that is a 50% retracement, which is 91.336. This is our buffer zone. If we have a pullback, we can have a pullback here, and that is your aggressive entry to take your short trades. Looks bearish to me. The next zone now to take your counter trades is 83,441, goes up to 85,290. As you can see, this zone has previously acted as a good level of support and resistance, and if you look left, this level has acted as a good level in the past, and now it will likely to act as a next counter trades to take over long trades. So at this point, we are in a bearish area. We can expect a pullback to the buffer zone, from where we can expect a fall again. Crude oil is now below our bearish area. Okay, let's check copper. So copper is now in between the decision zone, as you can see right here. That would be a good entry, but that would be a stop loss as well. So at this point, if we have a complete close above this 20 EMA and we are above this zone, and then only I will look for a pullback to take my long trades. Now if we are broken back below 50 EMA, then in that case I will use this zone as my trend continuation zone that market will likely to continue its trend downwards. So at this point, I'm not entering. It's no clear signal for copper. Let's check palladium. Now palladium is pushing down, and as you can see, if we have a close below 50 EMA, then it is likely chance that the market will keep on pushing down until it hit the next major level of support, which is 1801, goes up to 1747.24, from where we will look for our counter trades. So now at this point, if it breaks above and then we have a pullback above with an engulfing candle, then we will take our long trades until we reach this major area of value, which is 218. One goes up to 2286. Okay, let's check silver. So right here, as you can see, silver is behind the gold, and at this point, silver, we got a nice engulfing pattern here. If you would have entered, and if you follow me in my priority group, the reason I send you these trade alert, not to use it as a signal, just to identify the entry patterns, and follow me there from day one. Then you know this is the entry pattern I look at, and all the confluences met the entry criteria. And at this point, market is pushing up, and we have a next level of resistance, which is 20.470, goes up to 20.6430, from where we can expect a pullback. Then we will see how the trend goes from there. If we are still bullish, we can expect a trend continuation. Otherwise, we can expect a fall. But this is a zone from where I will look to exit my silver trades. So that's all for commodity market, guys. If you're getting value out of my analysis, please do not forget to hit a like button for me. And if you are new to this channel, subscribe and join Money Markets family so that we can all trade together and trade efficiently. So I hope you trade green the rest of the week. I'll see you guys in the next one. Till then, take care.